All right, let's talk about one of the most polarizing stocks out there right now, Palantir. This is a company that sparks some serious debate. Is it the next foundational software giant, or is it just a classic case of hype getting way ahead of reality? Let's dive into the data and see if we can figure this out.
So here's the puzzle that has so many people scratching their heads. Palantir just reported what can only be described as a phenomenal knockout quarter. I mean, growth was accelerating, profits were soaring, and yet the stock dropped. So what gives? This paradox is really the heart of the whole debate, and it's exactly what we're going to unpack today.
So here's how we're going to break it down. First, we'll dive right into this Palantir paradox. Then we'll look at the bull case, the argument for why the company is crushing it. After that, we'll flip it and look at the bear case, why the price might be way too high. Then we'll crunch the numbers ourselves before tying it all together to see where this company really stands.
So how did we even get here? I mean, this whole situation, it's really a story about what happens when a company's incredible performance creates these just insane expectations, where even flawless isn't always good enough.
You really have to look at the timeline to get the pressure cooker situation we're in now. The stock had this monster run-up in 2025. It hit price targets that analysts weren't expecting to see for another 2 years, until 2027. When you do that, you bake in these massive expectations, and that's what's turned 2026 into what everyone is calling the prove-it year.
Okay, so let's start with the bull case. For the people who love this stock, the story is actually really simple. Just ignore all the noise about the stock price and look at how the company is performing. They argue Palantir is just executing flawlessly on every single metric that matters.
And this quote right here, it just perfectly captures that bullish feeling. It wasn't just a good quarter, it was a knockout. For the bulls, the business itself is so strong that any sell-off seems, completely crazy, totally disconnected from reality.
And they've got the numbers to back it up. Look at this. A year ago, the company was growing revenue at 35%. The big question was, okay, can they keep that up? Well, they didn't just keep it up, they doubled it. They accelerated to around 70% year-over-year growth. That kind of acceleration for a company this size is just incredibly rare. It shatters what anyone was expecting. And it's not just their traditional government work either. Get this, the company is guiding for over 115% growth in its commercial business. And this is huge because it shows they're not a one-trick pony. They're breaking into that much larger enterprise market, and they're crushing it. And what's so important here is that this isn't just growth for the sake of growth. The bulls will point to an elite Rule of 40 score. That's a key metric that balances growth with profitability. Their existing customers, they're spending way more. Revenue per customer is climbing. And the company is doing all of this while making a profit. It's not just growing, it's basically a money printer.
And this all leads to this really powerful analogy the bulls love to use. Think about Amazon back in the 2010s, right? Its PE ratio was sky high, over 700. Critics were screaming that it was insane, uninvestable. But what happened? Amazon grew into that crazy valuation, mostly by building AWS into this foundational pillar of the internet. The bulls are saying Palantir's AI platform, their AIP, is their AWS moment. It's a technology that's so fundamental that it's going to let the company grow right into and probably way past its current high price.
All right, but for every bull, there's a bear. And the thing is, the bear argument isn't really about whether Palantir's a good company. A lot of them will actually admit that it is. Their entire case, literally the whole thing, is built on one single thing, the stock's absolutely astronomical price tag.
And this quote from Brent Thill at Bloomberg Technology just nails the bear case. It's not about the product, it's about the math. When you are, quote, the single most expensive stock by a factor of 2, it forces you to ask a really tough question. Is any company actually worth that much? And here is the number that just gives bears nightmares. At its peak, Palantir's PE ratio was north of 600. Just to put that in perspective, we're talking about giants like Nvidia or Apple trading at a tiny fraction of that. It's an absolutely eye-watering number by any standard, and it immediately sets off all the alarm bells.
And this chart here makes that valuation concern even more stark. Let's look at price to sales. It's a really common metric for growth companies. Palantir is trading at 45 times its revenue. Now look at other amazing high-growth companies like CrowdStrike. They're at less than 20, so Palantir is more than double. This is the kind of data that makes skeptics say, whoa, hold on a second.
So the bearish conclusion is actually pretty simple. Even if Palantir does everything right, even if they hit every single one of their growth targets, the starting valuation is just so high that it could take years and years, or, as one analyst put it, forever, for the actual business to catch up to the stock price.
Okay, we've heard the bull story, we've heard the bear story. Now, let's just strip away all the narratives for a second and look at the cold, hard data from their financial statements. Let's see what's really going on under the hood. And when you look at the income statement, you can't deny it. The bull case on execution is 100% real. Just look at this. In 1 year, Q4 2024 to Q4 2025, revenue jumped by 70%. And their net income, we're talking actual profit, it just exploded, going from $79 million to over $600 million. So this isn't some made-up story, it's a real, dramatic improvement in the business.
The company's financial health, also undeniable. Take a look at the balance sheet. Palantir is sitting on a war chest of almost $7.2 billion in cash and short-term investments, and they have very little debt. I mean, this huge cash pile gives them incredible flexibility, and it really backs up that money printer claim we heard from the bulls.
So, where does all this leave us? Well, it puts Palantir right at a crossroads. You know, it's caught in this massive tug of war between its own absolutely stellar performance on one side and the market's sky-high expectations on the other.
And really, that's what it all boils down to. The whole debate over Palantir isn't really about whether it's a good company or a bad company. The data clearly shows it's a high-performing one. The entire conflict is a race. It's a simple question. Can its flawless execution outrun the market's extreme expectations?
So in the end, you've got two completely different stories, and it really comes down to which one you believe in. The bulls, they see the next Amazon, a company that's literally building the foundation for the next generation of technology. But the bears, they see a great company, sure, but one with what an analyst called a Tesla problem. A fantastic product, but a stock price that's just become totally disconnected from financial reality.
Look, both sides have really compelling points, right? The execution is real. You can see it in the numbers. But that extreme valuation is also real. And that leaves us with the ultimate question for anyone looking at this company. What you decide probably comes down to what you focus on more: the amazing story of today's performance or the cold, hard math of tomorrow's valuation.